Hi everybody and welcome back to the channel. So the portfolio has reached an all-time high. We've crossed over the $30,000 mark, and there is quite some news out in the States that the Federal Reserve not only did not raise interest rates, they actually anticipate cutting interest rates 3 times in 2024. So what does that mean for stocks? It means that stocks are going to go higher, and that's going to benefit a lot of different sectors, many of which I'm invested in. So I have 2 investment accounts here. I have an RSP and a TFSA. Let's get into the TFSA first. And please leave a like and subscribe to the channel if you want to follow along and never miss any one of my updates. And I'll also be doing some stock reviews coming up. I plan to be doing it on Dollarama soon, so stay tuned for that, and please sub to the channel so you don't miss that. And we can see in the TFSA, we are at 28,851. The last week has been pretty good. We're up 281. So the market really liked that news of lowering interest rates as it lowers, the amount that a bank will pay you for a savings account, and as well as GICs. So if those investments are less attractive, people are going to want to take higher risk and invest in the stock market. So just like how high interest rates lowered stock prices, low interest rates will make them higher. So Apple has reached basically all-time highs, doing very, very well. I'm not currently buying any big tech as of right now because I think there's a lot better value out in the market. I think they're fully valued to slightly overvalued, a bit rich for my blood. So I'll be waiting on these. Just going to hold them. No rush to sell them. They're fantastic companies, but I do think there are better companies trading at, well, not better companies, but companies trading at better values right now. And for ATD, this one is still well in the green. I purchased 2 more shares of Aritzia, so they are going to have an earnings on January 9th. Definitely looking forward to that. I do anticipate it'll be quite a good earnings report, so this could jump up a lot. So I decided to get 2 more shares of this, going up to 46. And Lululemon had incredible earnings in the previous quarter. So in my mind, I don't think Aritzia has any excuses for poor performance. Brookfield Asset Management, so both BAM and BN are up a lot. So they're doing pretty well. I'm guessing that the lower interest rates are kind of helpful to them in their real estate segment and their renewable power segment, their infrastructure. So lower rates benefit BAM and BN as well. So we'll see if that continues, but they're both finally in the green after being heavily in the red for quite a while. So pretty happy to just hold on to those for right now. And Costco actually declared a $15 special dividend, so their earnings were quite good. They beat their earnings projections. Revenue didn't quite meet expectation, but I'm very happy to receive a $15 dividend from Costco. I only have about a third of a share, so I'll be getting about $5, but again, very nice surprise. They do this every couple of years, and this is the highest one yet. Fantastic company. It's just run up in price. Honestly, if this ever dropped substantially in a short period of time, I would definitely get into it. I think really your only opportunities to get this stock are when the market crashes, because then everything kind of sells off regardless of company fundamentals or how good the quality of the company is. With CP Rail, I acquired 2 more shares of this company, so going up to 4 shares of this. Their expenses are not expected to rise in the next 5 years, but their cash flows are anticipated to grow very, very nicely. I decided to get into CP, so just doubling our position here. Solid railroad. With ENS, I got 6 more shares. So Enbridge, the underlying business, actually raised their dividend recently by 3%. So the business seems to be doing fine. And then if we're going to get more rate cuts expected, then this business is going to really recover in the next year. Again, I don't hold ENS for capital appreciation. I own it for just massive income, and I can use it to acquire more shares of this or invest in other opportunities. But as of right now, definitely reinvesting into this because it's in a nice dip, and I'm going to be taking advantage of that. And new position in EQ Bank, so I bought 2 shares of this around the $80 range. So this bank has just been performing so well. They have such a high dividend growth of 20-25%. And I anticipate that this will be an incredible yield. And they raise dividends like pretty much every quarter. Like they just recently had about a 5% bump. And while other banks are expected to grow very little, in 2024, EQ Bank is expected to increase their customers by about 40% in 2024, and that's incredible growth. The fact that this is such a small cap, fast growing company, and it doesn't really have a higher valuation than the big Canadian banks, I think there's a lot of opportunity for this to outperform not only the other banks, but outperform the market as a whole. So very happy to get this in. I've been monitoring their earnings reports for a while, and they haven't been disappointing me. Like compared to BNS, which was a disappointment, but they recently had an investor day, and I think they're taking less focus in Latin America, and they're going to be investing elsewhere. So we'll see if BNS can turn that around. Even though I think this is still undervalued, I think EQ Bank has a solid chance to outperform all the other banks in Canada, considering it's so much smaller than all of them. And we can see that REITs are one of the sectors that benefit from the lower interest rates recently. So it'll be really interesting to see where REITs end up. But I think if the rates do get cut, these will go back to near or at their all-time highs. So there's a lot of upside in REITs, I think. And you can also collect that sweet monthly cash flow from them in the meantime while you wait. And we see that Intel is way in the green. They recently had a nice AI presentation. The market is really, really liking Intel's focus into this very, very large industry that is expected to grow massively in the next 5 to 10 years. So naturally, the stock is getting bid up. And of course, they are showing positive financial metrics of moving into positive free cash flow, which they haven't been in the last year. So definitely turning around. And I think the turnaround should be complete around 2026 or 27, maybe 28. At that point, I would imagine the stock would hit an all-time high, and around there I'd be willing to sell it just because the semiconductor industry is very boom bust. It's very cyclical. So right now I'm just catching that recovery. I do plan to sell it eventually. I'm not going to hold this one forever. So I'll keep you posted if I do sell this, but I don't think it'll be for a few years. And then with Smart Centers, I acquired 2 more shares going up to 67. So this is slightly recovering. It's still in a little bit of a dip, but it should recover nicely. And with TELUS, we went up 4 more shares going up to 89. So that completes my yearly goal that I set out in early 2023 to buy 4 shares per month. So we've gone up to 89 shares, almost 100. I think I'm going to make it an even 100 in the next year in 2024. Just a nice number to hit, and then I can start focusing on some other positions. And this is still in a little bit of a dip, so we're going to lower our cost average in this nice dividend grower. And again, rates coming down will benefit this stock and aid in its recovery. And with the RRSP, we're at $18.99, so that's been a pretty good week. We're up 1%. And Starbucks has not been doing so well this year. There's a little bit of fear around McDonald's starting their own little Starbucks knockoff, but I think it'll be fine. I think it's actually poised to have a pretty good year. I think Starbucks has a very strong brand, and people are addicted to coffee. Some people have this every single day. So I think the earnings reports should shoot this up in the next 12 months. With SCHD, I bought 1.11 shares. Recently got a little dividend, so reinvested it right back into SCHD. I think dividend stocks as a whole are poised to have a very strong year in 2024, just like the tech sector had a big boom in 2023. So I'm going to be focusing on buying those kind of stocks for 2024. And with Vici Properties, I bought 2.214 shares of this going up to 16. So this is finally in the green as well. So the entire RSP is in the green, and we're just going to continue buying shares of these whenever I find that they're trading at good values, and of course reinvesting the dividends right back into them, as this is just a dividend growth portfolio, and we're just going to be reinvesting the growing dividends into each one of these holdings over time and just watching the results. And for the dividends earned, we have earned $2,096.87 in dividends since starting the portfolio. Our annual dividends have grown from $12.88 to $13.40 per year. Monthly, we went from $107 to $111.74 a month. So nice progress there. The daily average went from $3.53 a day to $3.67. So we're getting closer to our $4 a day dividend goal. Once we hit that, it'll be $5. So we're constantly moving the goalposts as we achieve our targets. And if the portfolio were to work a 40-hour work week for me, it's got a raise from 62 cents per hour to 64 cents per hour. So we can see that year over year, 2023, we've earned over $1,000 in dividends, and then we're projected to earn over $1,300 in the next year. And this number will actually be higher as we're going to be reinvesting new dividends and my regular deposits every single month. And we can see some nice progress in 2023, as we can see that my November is higher than August by $9, and we can see December should be higher than September as well. So even my higher paying months are higher, and my lower paying months are climbing as well. So that's nice to see that little progress. Even in a short amount of time, it keeps you really motivated to continue investing. All right, so thank you everybody for watching the video. Please leave a like, don't forget to subscribe, and I'll see you next time.